and welcome everybody. Thank you for taking the time to join what is the latest in our financial services webinar series. As Diala says, my name is Omar Mahmood and I'm a partner based in Qatar, and I also lead our financial services practice in the Middle East and South Asia region. And I'll be your host for today. The topic for today's webinar is environmental, social and governance, ESG, as it relates to the banking sector. Now, three of our panelists for today are actually Qatar based. However, the subject we'll be discussing today really is applicable across the GCC, given the similarities and the opportunities and the challenges within the ESG space across the GCC banking sector. So while we'll be talking about ESG as it relates to the banking sector, some of the specific aspects of ESG that we'll be discussing today are really around whether this is something that's a short-term phenomenon or really whether this is here for the long term. We'll be looking at some of the practices adopted in more developed Western markets and how those relate to ESG within the region. We'll be talking about disclosure and transparency around ESG reporting and standards that are being followed across the globe. And we'll be looking at the Islamic financial institution aspect and seeing how Islamic financial institutions compare to their more conventional counterparts when it comes to ESG, of course, amongst other subjects. In terms of today's session, I'll be joined by three other panelists. We have Kay Swinburne, who should be joining very soon, who's the Vice Chair of our financial services practice with KPMG in the UK and formerly a member of the European Parliament. We'll be joined by Mohsin Mujtaba, who's a director and also the head of product and market development at the Qatar Stock Exchange, and Akber Khan, who's a senior director at Rayan Investment, a Qatari financial institution. So without stealing their thunder and without further ado, I'd like to introduce our panelists to the stage so they can actually formally introduce themselves. So Mohsin, over to you.
Sure. Thank you, Omar, for hosting this today. And I'm glad to be partnering with KPMG on this initiative from Qatar Stock Exchange. So I've been with the exchange for about 17 years now. I've been heading the product and market development for the last, I would say, 10 years or so. And the ESG is very much on the agenda. And I think we'll be discussing more about what Qatar Stock Exchange is doing. So I'll leave it for that later on.
Thank you, Mohsin. Akber, over to you.
So thank you very much, Omar. Thanks for the introduction. So I look after asset management at Rayan Investment. As you mentioned, we're based in Doha. We invest in both equities and in fixed income across the Gulf. So we have exposure to what banks are doing across the region. For us, ESG is very important for what we do, being an Islamic entity, and we'll discuss that a little bit later. This ties in very closely to how we invest, but also we've been working on the passive side of our business. We've been working hard to try and bring some ESG products on board as well. So we've been working with some of the industry leaders for a few years on this.
Great, thank you for that, Akber. As I mentioned earlier, our third panelist, Kay, should hopefully be joining soon, just facing some tech issues at the moment, but we will continue. So before we do dive into the Q&A session, what I'd like to do just at the outset, just to set the scene, is just to run you through some of the answers that came back for the poll questions that we had posted on social media over the course of the last 10 to 12 days. We posted 5 questions. I think it'd be useful just to see some of the responses to these questions that will give us some more context before we get into our Q&A session. So the first question that we have here on screen that we posed was, are GCC banks behind their Western counterparts in embracing ESG? And here, 90% of respondents said yes. So clearly work to be done for GCC banks. The second question that we posed was, do you believe a strong ESG framework leads to higher long-term profitability and share price. And once again, 90% of the respondents answered yes. So clearly there is a unanimous agreement that for the long term, ESG is something that is certainly beneficial for the banking sector as a whole. The third question that we posed was, is ESG a core element of your board agenda at present? And here, 72% of respondents answered no. And this is certainly not surprising, but I think one of the positives from here is that at least 28% of the respondents have said this is something that's important for the board agenda at this moment in time. And clearly this is something, and it's a topic that's rising in prominence and will continue to do so in our view. The fourth question that we had posed was, do Islamic financial institutions have a head start when implementing ESG best practices? And I must admit the answer here was slightly surprising for me. 57% of respondents said yes. I personally would have thought that percentage would have been a lot higher, but this is something that we will be discussing throughout the session today. And the final question that we had posed was, will ESG reporting become mandatory in the near future? And here, 89% of respondents said yes. And I think this kind of optimism is certainly something that's shared across the board at the moment, because we see a significant amount of activity around the reporting requirements when it comes to ESG. And most recently, only on Thursday, many of us would have seen and heard Joe Biden actually signing an executive order around disclosure requirements for climate change related financial risks. And this is something that many people in the US believe will lead the way for the SEC to introduce mandatory reporting when it comes to ESG. And we do expect this to trickle down to our region as well. So with those 5 poll questions setting the scene, what I'd like to do is at this stage go into the Q&A. And I'm glad to say that we are now joined by Kay. So Kay, thank you for joining, and perfect timing as we just move into the Q&A session. So maybe Kay, just a brief introduction from yourself would be great.
Thanks, Omar, and apologies. I'm obviously very tech unsavvy, or at least my VPN has been preventing me from getting onto our own WebEx. So apologies. My name is Kay Swinburne, and I'm the global co-lead for sustainable finance for KPMG. But I sit in the UK firm of KPMG as the Vice Chair for Financial Services. Before joining KPMG about 2 years ago, I was in the European Parliament for a decade, leading on financial services legislation. And so one of the last packages I dealt with as a legislative file was the EU Sustainable Finance Package of 2018. And so all of the SFDR, the reporting requirements, as well as the taxonomy and the benchmarks file were all things that I actually had a role in assisting with. So hopefully I have a bit of a background that would be helpful for your audience today, and can maybe give a bit of a global context for what's going on.
Great, thank you very much for that, Kay. I did see recently, Kay, you've just been appointed to the International Regulatory Strategy Group, so congratulations on that appointment as the chair role for that group, so well done.
Thank you, Omar.
So now just moving on to the questions, if we could dive straight in. And I'd like to actually start with the $1 million question, and maybe if I could share that with you, Akber, being the banking industry rep for the panel. ESG is certainly all the rage at the moment, the buzz acronym, a hot topic for the sector, not only in Qatar, in the region, across the globe. Do you think this is just more of a short-term phenomenon, just more of lots of short-term enthusiasm, or do you really see ESG as being here to stay and something that we see for the long term?
It's a great question, and it's one that gets discussed and asked a lot, particularly in the banking industry, where the industry is very fond of jargon, very fond of acronyms, and we move from one acronym to the next every financial crisis and so on. This acronym is a little bit different. If it is transitory, that transitory period is probably going to be a few decades rather than a few years. So for the foreseeable future, it is here to stay, and the reason is pretty simple. And I think as you outlined, the E is for environmental, the S is for social, and the G is for governance. And it's an interesting confluence of events in the last few years which have really brought this from being something that was on the periphery to being something which is very much mainstream and central to how things are, not just in banking, but in the broader economy. Climate change is obviously an absolutely critical topic and has reached, and is not going to go away anytime soon as a theme. It's probably intensifying, and the headlines are just covering more and more space. The S aspect really probably came to prominence a lot more, particularly given that we're more than a year into a global pandemic, and that really does concentrate the minds on society and the role of corporations, of governments, and the responsibility towards people and society and that element of their stakeholders, whether that's their employees, whether that's their customers, etc. And the G is not a new phenomena, is not something that's new, I would say. All fund managers, all investors have been looking at the G aspect for as long as they've been investing. The G, which is the governance, is about how well a company is run, how well it protects its minority shareholders, to what extent are there protections in place for these minority shareholders. And that again is has been there for a while, and it's of growing importance. So put together, ESG is an acronym that is relatively new. My guess is that in 10 or 15 years' time, perhaps earlier, we won't be talking about ESG. Everything will have become ESG. It won't be, oh, is this ESG or not? It'll just be the default option. So on that basis, the earlier it's adopted and the earlier companies start taking it seriously, the better off they'll be. I think we have a delay with Omar.
Yeah.
It's okay, you're not the only one with technology issues.
Sorry, am I audible now?
Yes. You are.
Yeah, just touching upon 2 points that you made. I've got one was really around the G and one was around COVID. I think the G aspect, you're absolutely right. Within the region, Qatar and the rest of the region, we've seen a lot of activity around governance over the last couple of years with new regulations, new laws coming into place. So I think there has certainly been a flurry of activity, not just in the banking sector, but also just generally for listed companies. And I think the point you made around COVID, many would say COVID actually has acted as a catalyst to really speeding up companies and their adoption rate of ESG. And we saw through the pandemic how employees and workers have been supported by, again, not only banks, by a number of companies and by the regulators over the last 12 to 18 months. And we've really seen ESG come into the fore as a result of that. So just to echo those 2 points that you made, thank you for that. Mohsin, if I could just kind of move to you, if that's okay. The Qatar Stock Exchange has been very active in this space. I know you have certainly been championing a lot of change in the ESG space. I know that Qatar Stock Exchange has signed up to the Sustainable Stock Exchange Initiative, and you have also introduced voluntary reporting, and we see on your website, you've got very granular metrics around scoring how companies are doing with regards to ESG practices. So I welcome your thoughts just to hear about what the Qatar Stock Exchange actually is doing in the ESG space, and really what you're planning on doing in the future.
Yeah, thank you. I think so it has been on our agenda since 2016, as you mentioned, that we are a signatory of the Sustainable Stock Exchange, and we issued the guidance for voluntary disclosure of ESG indicators. That said, I think there is a lot more to be done, and obviously in the last 3 years, I would say, a lot of ESG aspects have come to the fore, and investors have been demanding more answers with regards to these elements. At the macro level, you have seen that Qatar has, in terms of its LNG exports, customers or buyers have demanded for better disclosure of carbon utilization or carbon emissions of LNG transportation to the Asian region. So it is a topic which is now hitting home. So a number of customers or our mutual customers that are on the call today, you can see that they are also being asked on their investor calls or investor meetings by the investors around ESG. Now, the question I think for us over the last 6 years since we've been active in this has been, how do we get the listed companies to report more and more and to be up there in terms of meeting investor requirements. So from voluntary, I think we are moving towards mandatory, and it will be January of next year where it is likely to become mandatory for companies to report. It is a good thing, but it also is understandably, I think, requires a lot of work for the companies to deal with in terms of reporting what is mandatory. With accounting, I think it has been, or with financial statements or financial disclosures, it has been pretty, I would say, standard because of IFRS requirements and people like yourself helping companies provide that information in a standardized manner. But on the ESG front, the industry overall is looking for a standardized reporting requirement. So that is not a standard yet, but the way we plan to go about it in terms of making it mandatory, we will put a sector-based requirements for certain aspects of G, S, or E, which are more relevant for us for that specific sector to be reported into the stock exchange as part of either their annual report or as part of their sustainability reports. And different corporates are dealing with it in a different manner. So that's, I think, where we are heading towards in terms of reporting requirements. Now, the idea also is, or the question also has been around, how do we as an exchange report the overall ESG performance to the investors? And for that purpose, we are launching an ESG index this year, which will reflect the performance of companies that have better ESG practices employed in their shop. So I think it's mandatory requirements and ESG index. These are two things which you will be seeing going forward from us.
Excellent. Thank you very much for that, Mohsin. I think great to see the exchange obviously taking a leading role in this. And those 2 points you mentioned, obviously around mandatory requirements and ESG index, I think certainly are steps in the right direction. Kay, if I could just move on to you, if that's okay. I think it's a nice segue into your domain and really what we're seeing in Western and more developed markets around reporting requirements, mandatory versus voluntary, and also looking at some of the other initiatives taken in those markets. It'd be great to get your perspective, Kay, around some of the initiatives you're seeing globally, so we can look to see how that kind of impacts our region as well.
Absolutely, Omar. And I guess the EU took an early regulatory position with regards to ESG and decided to go after the financial services sector as the facilitators. If they supply the capital, then they can effectively instigate change and in behavior of the corporates through actually limiting capital to them if they weren't prepared to change their behavior with regards to ESG standards. So that for me was the starting point. So whether that be the asset managers under the Sustainable Finance Disclosures Regulation, where all asset managers, their funds have to disclose what is called double materiality. So anything that actually needs to in itself cause harm to the environment or has a detrimental social impact. And the other side of that is sort of doing harm more generally. You have to actually do both assessments for that. So you have to make sure your company and your supply chain are not doing any harm. The reality is for me that those sustainable finance disclosures are in very early days because the corporates themselves do not know what they need to disclose at this point in time. So the fund managers in particular are really struggling with trying to get enough information from the companies they're invested in or potential investing companies to actually get the information they require to make the assessments. And so you now need a real concerted effort to get that standard of data disclosure up, because it's not standardized right now in Europe. So they are looking at a non-financial disclosures requirement of all corporates. And we suspect that that may come out and may be applied in the next couple of years. So there's still a long while from when the SFDR actually applies and the fund managers all need to disclose versus where they actually need to be with regards to the corporate disclosures. So there's a delay. So the quality of data is not going to be as good as it might be. There's a lot of global initiatives out there to try and improve this data too. So early on, the World Economic Forum decided to do a piece of work with 140 of its global leading firms, looking at what types of standards it could disclose so that everybody within those largest global firms reported the same things. And so we're starting to see this year a number of those very large global firms starting to report to these WEF metrics. There are 26 of them, they cover all sorts of areas, but the reality is they are measurable and they are comparable. And so it's a start of trying to get a global standard. China have also got their own reporting requirements. They've got their own taxonomy. They have their own system, which is not directly comparable to the EU system. The UK, having left the EU, is now saying it's going to have its own system. So there's at least 3 systems, plus all the individual countries choosing to go slightly different directions. I would advocate that we need global standards in this space, and we need, for global companies, global reporting fields that they should be required to disclose. And so for me, there is a piece of work at the moment that's going on between the accounting standards boards, the IASB. They have the global accounting standards they try and apply. They're going to try and set up a separate board, which will actually have ESG standards, particularly climate change, but it will definitely be broader than just the E of ESG. If they manage to do that and set up this global council to set these standards, I think we stand a chance that we have comparable data around the globe rather than competing pieces of regulation where people are going to have to disclose different things to different jurisdictions. And so I'm very hopeful that for the first time, we're likely to see an emergence of a global set of standards using IOSCO and the ISF sort of board to actually try and produce this. It's a question of what role the US plays in this. The USA has been a little slow to the table. They certainly haven't been leaders in this space as a government, but when you actually, a federal government, but when you actually look at individual companies, many of the US asset managers and the banks have been at the vanguard of some of the work on ESG. And so there's now not only company pressure, but also now under the Biden administration, a change in heart with regards to how they're interacting with this. So I do think those global fora, particularly IOSCO and other global fora, are likely to start coming together with US support now to try and get the global set of disclosures for firms. And then you have the next step of who verifies the data, who actually assures it, and all the other issues that come from that. But I'm hopeful. There is so much work going on globally. There is so much appetite for there to be some consistency that I think we're likely in the next year and a half, 2 years, there's some momentum growing to actually try and deliver that collaborative global set of standards.
Great, thank you very much for that comprehensive response. Okay, and just sticking with UK, if I may, obviously, as you're aware, a number of banks in the GCC have a presence in Europe and the UK as branches, as subsidiaries, rep offices. How do you see the wave of new regulations and initiatives being taken in Europe and the UK actually impacting those?
So I think, Omar, you've frozen, so I'm going to just take up the question from where I heard it. So ultimately, the banks are subject to what was agreed at the FSB, where they actually have the TCFD standards for climate change. And those disclosures are now fairly universally accepted as being the format that banks are going to be using in order to actually have their stress testing for climate change scenarios. And so for me, the banking sector almost has much more of a global framework already to work towards. And anybody who operates, not just in the UK, but also across Europe, because the ECB is following in the same footsteps as the Bank of England, will be expecting their banking entities to stress test under these climate change scenarios of the Paris Agreement. And I genuinely think at the moment the UK PRA has asked the 7 largest banks to be the front runners in this, to actually do their stress testing, which they've all submitted in the last few weeks and months. So they've actually now got their first stress data in there. It's a work in progress, so they will modify it as they learn from each other and as they learn from the system globally. But the ECB is going to do the same next year for its largest entities too. So we're going to learn there as to what's going on. So the ECB, along with the European Banking Authority, the EBA, will be doing those EU stress tests on their banks. As we actually roll that out, the smaller entities and the branches and other subsidiaries of foreign banks will be expected to start also doing some of these checks. Not yet, but certainly into the future, I expect the smaller banks and those branches and subsidiaries to be included. So you will find that I think a global stress testing will start to appear. And certainly I was heartened to hear Janet Yellen also say that US banks are likely to have to start doing these stress tests for climate change very shortly.
Great. Thank you for that, Kay. Akber, just turning to you, if I may. Many have argued that given the oil and gas dependence that we have in the region, it will always be very challenging, not just for banks, but all entities within the region to really claim full, so to speak, compliance with ESG, given the challenges in meeting, for example, net zero carbon emission targets and the like. What are your thoughts on that?
It's a valid contention, and as Mohsin alluded to earlier, I think the government in Qatar and presumably the other Gulf countries as well and we've seen already green hydrogen and other discussions in Saudi as well. So I think the governments of the region are cognizant of the environmental sort of obligations that they have to try and clean up what they do. Clearly, when you're producing fossil fuels and taking them out of the ground, that does generate a lot of emissions, both in the process of extraction and obviously in the consumption of what it is that you're taking out. Yes, gas, and there are some Gulf countries that sell gas as well, not just Qatar, and that is seen to be sort of less evil, if you like, but it still is a fossil fuel. So from a corporate perspective, yes, if you're a bank and you're lending money to the state or to the state oil company or to the state petrochemical infrastructure, then yes, that is going to be counting against you, if you like, from the ESG perspective. But there are other aspects of what you can do to offset this or to try and improve the scores and other measures that you can take. But yes, you will have some aspect here, but I mean, I would say that there is a bank in the region which has a AA ESG rating, and that's QNB. QNB is obviously the largest bank in the region. So if they can achieve a AA rating, then it surely means others can as well.
Sure, thanks, Akber. And Mohsin, on a similar question, really, what have you actually seen in terms of live examples or practical examples of good practice that banks have adopted, whether Qatar or the region? And linked to that, what else do you really want to see banks doing to further their progress around ESG?
Yeah, I think just to build on what Akber was saying and the point I made initially, I think around the state level commitment around carbon emissions and climate change. But if we look at it at the global context, I mean, I think it's always seen, the region is seen as the producer of oil and gas, so it must be the highest producers of emissions and greenhouse emissions. But if you look at the cumulative share of this region to the overall global greenhouse gas emissions, Qatar is only 0.12% cumulative throughout. It has been measured, right? So 30, 40 years or whatever. And the whole region, including Saudi, UAE, and Kuwait and Qatar, is about less than 2% of the global cumulative contribution to the carbon emissions. US is 24%, 25%. China is 13%. India is about 3%. So we need to look at it in the context of the whole global situation when it comes to commitment to or contribution to emissions and the effort that needs to be done. Now, the fact that contribution is so less in the global context, and I always see that as an advantage for a country like Qatar, that it is very easy for us then to tackle things also because of our size, and to take a holistic approach within the country of how we are going to address not only climate change issues, but the S and the G part as well. So coming to your question now around what more the banks can do to further the agenda around ESG, I think as Kay also mentioned earlier, at the end of the day, it's about financing, right? So if you want to change the behavior of the corporates, of the businesses in our society as a whole, it's access to finance. If banks start to incorporate the ESG criteria in their financing, in their lending criteria, then obviously the society at large will start to change its behavior. Now, and it's fairly very much possible because, I mean, given the size of the country and the number of businesses or customers of the banks that are participant to the call also, I think if banks are able to work with their clients to help them incorporate ESG practices into their businesses also, then I think that will help in further upgrading or pushing the ESG agenda around the social governance and the environmental aspects of the business. So it is at the end of the day access to finance.
Yeah.
If I can just add to that, just
Sure.
a small point. You know, one of the things on the social aspect from a banking perspective is, you know, to what proportion of bank lending is to SMEs? What proportion of bank lending is to startups? These are initiatives which, if banks are doing or increase in what they're doing, they will score more highly on the S side, on the social side. So I think one of the things which is apparent when you look at what goes into an audit, if you like, of ESG scoring, is how many different aspects it encompasses and the number of different areas that the bank managements can look at to understand what they're doing, what they could be doing, and what they're not doing. So I think it is a very broad criteria, and it's a very broad audit.
Yeah, no, absolutely. And to the point that Mohsin made, just bringing in Kay here, if I can, around some of the merits and what banks need to be doing. I mean, in the region, I think, as both Mohsin and Akber have said, we've seen green bond issuances, we've seen sustainability reports being delivered, we've seen increased diversity at a board level, greater financing being provided to SMEs and the like. But really, in terms of moving to the next level and really incorporating ESG metrics, for example, into lending criteria, and re-looking at customer and supplier profiles, the level up, let's say. Really, where are European banks on this front, and how advanced are they in really incorporating ESG into their core businesses?
So there is a major continuum. So there are those who are in the vanguard and those who are lagging behind. And typically it is a size issue. So the largest banks have been required by their regulators, obviously, to participate in these stress testing scenarios for climate change. And that means that they have to actually understand their entire portfolio and the climate change impact of every contributing sector to that portfolio makeup. And so it's a very granular exercise, bottom up, that they're doing. And so when you start to have that information, you start to realize that, you know, shining a light on these practices, shining a light on what's within your portfolio, means you start to think about what would you like it to look like if it's not how it is now? Where would you want to get to? And so you start to give yourself some targets. And so best practice at the moment is really looking at those industries that are heavily carbon intensive, and what can you do as a lender to actually help facilitate the journey that that company needs to go on to actually reach its net zero targets, whatever the targets are. In the UK, you know, most companies are actually aiming at 2050 because that's the legislative framework. But then to get to the target by 2050 of net zero, you have to have made some significant changes by 2030. And so you've got these decade milestones that people are looking at. And there's no point just cutting off funding to a carbon intensive industry, because actually you want to fund their transition. And so the way to do that is to actually look at that transitional funding. How can you facilitate the change? You make the funding conditional upon them making certain changes over time and meeting those targets as they've agreed. So it's not about cutting off funding necessarily, it's about helping those companies on the journey so that you really can make a difference. And the leading companies across Europe are doing this, and certainly certain member states like France have taken this very seriously. France didn't take its foot off the gas, as it were, probably not the appropriate metaphor, but it genuinely post-Paris has not let up on its financial institutions. And so post the Paris agreements, the original COP sort of agreements where that net zero target was agreed by such a large amount of the population, governments, they have actually kept up the pressure on their banking sector. You also see their asset managers really having to conform to some very high standards. And, you know, yes, there are EU rules, but different member states within the EU have actually put a different level of pressure on their participant financial services. And France is up there. Germany is quite strong. And you've got the Netherlands and the Nordics are also up there in terms of the pressure they put on. And, you know, the Nordics have always been much greener in terms of their sustainability targets. And so their banking sector typically have been ahead of the curve. But it's a question now of what do you do with the smaller entities who will find this much more difficult to gather the data and to actually make the assessments. And so I think most of the regulators have got a duty of care to the smaller banking and asset management participants to help guide them on what data they need, what the quality of that data should be. And if they're not getting what they need, some assistance through, you know, government's requirements on disclosures for corporations. And then I think that combination really will help. You know, in the UK, they've made it mandatory for TCFD disclosures of all premium listed companies before the end of the year. That data is still very principles based as opposed to granular standards that, you know, the regulator is specifying. And I think those premium listed firms will start quickly to coalesce around some standards themselves in the absence of the regulator doing it, which will hopefully mean that the companies following them will at least have something to aim towards, rather than actually all companies required to do it all at the same time, and they all have the same steep learning curve and the same expenses being incurred. So hopefully the smaller firms will benefit from the bigger firms actually ploughing the furrow here, rather than everybody having to do it and learning on the job. Sure.
Just looking at some of the questions, Kay, that are coming through in the chat box here. One question here is, the issue is one of substance over form too. Any thoughts? And this is a question I actually wanted to pose to you in terms of the balance between actually reporting and actually the substance of what entities and companies are doing. Now, you can see kind of a mixed bag and where entities are reporting a lot, but haven't necessarily made a huge amount of progress, and others you see have made a significant amount of progress, but the reporting and what's being given to the public is not necessarily where it needs to be. Any thoughts around the balance between the two?
So I do have a major problem with the term that's used in the EU is greenwashing, where people are now claiming and making certain assertions that they are, green and that they have an ESG sort of decent score. And what worries me is that some of the scoring that's done with some of the global entities, the same company can actually score a red on one metric and be a green on another. And that does not make any sense to me at all, that the same company using a different black box model can come up with completely different scores, one of which would be acceptable, one which would be unacceptable. So I think there needs to be some idea as to how people are going to verify this information going forwards. I think, verification, possibly even formal assurances on this data will be a requirement going forwards. Because, for a company to claim that they're doing one thing without somebody signing off that what they've said they've done is actually what they've done is a strange situation when, it does form part of an investment decision that asset managers are making on these firms. So verification, possibly formal assurances in the forms of opinions, I think are likely to be the way forwards. But, rhetoric and a marketing document is very different to a real substantive disclosure, which is verified and assured. And I think, we'll start off with the rhetoric, but I think we will gradually move towards that much more formalized situation where you can have certainly a degree of confidence that what's being said is being delivered.
Thank you, Kay. I've got a question here. Someone would like to hear from Mr. Akber and Mr. Mohsin. On the main ESG disclosure implementation challenges and opportunities that they think Qatar-based listed companies specifically have. So, Akber, maybe I could just start off with you first, if that's okay.
Sure, and I think it's an important question, and it doesn't just apply to Qatari companies, it applies to companies across the region. Given that we're starting from such a early stage, one of the challenges that a lot of companies have is not that they don't do anything which ticks the ESG boxes, is that they don't tell anybody that they do anything which ticks the boxes. So the first point is disclosure. And as Mohsin's saying is that as that becomes mandatory in Qatar, that'll fix that pretty quickly. Other countries in the region presumably have, I have different timetables for when this starts becoming a mandatory disclosure. So the first step is at least just telling people what happens, and that immediately will improve the scoring of a lot of the that a lot of the banks get. So the second thing is when you know what your score is, how good or bad it is, what you do about it. So within the Gulf, there isn't any real excuse for companies to have low scores by virtue of being in the Gulf. The Gulf is not any different to any other part of the world. People companies can, every bank can and should be doing recycling, as an example. It's not about whether you're in Europe or the US or the Nordics or in Kuwait or anywhere else. How many banks do recycling? That's another question. And to me, it's an easy win. Governance is an area in terms of transparency, investor communication, the independence of boards. As I mentioned earlier, protection of minority interests. I know that, Omar, you've been working with companies a lot about this for the last few years, but we are very early on in this journey in Qatar and in the rest of the Gulf. Now, some companies are very good at it and have done very well in terms of their governance. Other companies have a lot further to go, are a lot earlier in their journey. So I don't see this as a Qatar issue or as a Gulf issue. I see this as companies getting better at what they do, and companies and management teams remembering, and this is what we try and remind management teams all the time, they don't own the company that they run for the most part. We own them. They work for us. They need to amend how they think of the company accordingly. We, meaning shareholders. Very few management teams in the region actually are shareholders of the companies that they manage. So it requires a slight mindset change to understand why they should have transparency, why they should have better communication, because they're talking to the owners of the company.
Sure. Mohsin, your thoughts, your brief thoughts, please, so we can take a few more questions as well.
Yeah, I think I'll just a couple of points. I think, first of all, I think building on where Akber left it, there is a need to align the managements of the banks and companies here in Qatar with the interest of the shareholders, right? So for that purpose, we, along with the QFMA, came out with regulations for employee stock options or incentive schemes. And I think we will need, working with people like yourselves, to encourage companies to adopt such schemes, because as soon as the management of the company is aligned with the shareholder interest, then everything starts to happen at the management level. Now, in terms of reporting or disclosure requirements, the specific question that is there, the companies need to look they're looking for clarity in terms of disclosure requirements, right? Because Akber will ask a question from a company, maybe something related to carbon emissions is more important for him compared to somebody else in QNB asset management or in Aventicum. So we as an exchange, as I mentioned, are going to launch an index. And on the back of that, we are going to require a lot of data reported by the companies who will be part of the index. So we will be coming out with template requirements that, at least for the purpose of the index, you need to report these 30, 40, 50, 60 questions, data points, not just yes and no. And then that will start to form the basis of the requirements. Now, obviously, there will be a need to have a third-party assurance on that data, because company can say whatever they say, but investors will need a third-party assurance to have to find that information credible. So I think it will be a combination of various stakeholders coming together to shape that standard disclosure requirement.
Thank you for that, Mohsin. Just conscious of two more aspects of ESG I wanted to cover, and I'm also conscious of time. Akber, one for you again, if I can, the Islamic angle. We raised a poll question around Islamic financial institutions and whether our respondents believe that they have a head start. 57%, as I said earlier, said that yes, they do, particularly given the ethical umbrella within which Islamic financial institutions operate in. And a lot believe that the S aspect of ESG, Islamic banks and financial institutions, do have a head start in. What are your thoughts around the applicability to Islamic financial institutions?
Sure. I mean, you're right. We do, as Islamic financial institutions, we're an Islamic asset manager. Islamic banks are the same. We do have a bit of a head start on the S. A lot of the things that we don't do would be considered under what used to be called, or what socially responsible investing. So, Islamic financial institutions don't get involved with companies which are involved with, say, with gambling, with tobacco, with defense, with other so-called quote-unquote social evils. And so that already means that we are slightly ahead of the game. We don't have to, Islamic banks don't have to stop giving loans to defense companies or stop giving loans to tobacco producers. Frankly, there aren't that many tobacco producers in the Gulf anyway. But a conventional bank perhaps would have to look at things slightly differently. So yes, there is that aspect where there is an intrinsic alignment between what an Islamic financial institution is and what it can do. Applies to insurance companies as well, and what ESG requires. There are other elements of S which they need to tick the boxes on. They need to, for example, banks need to think about the messengers and the people that they employ in terms of security guards and the welfare of the workers, particularly the lowest paid workers in a bank. Where do they live? What is presumably they've been hired by a third party. What does that third party do? So these are some of the conversations that you will hear companies. For example, Apple gets criticized because it'll get phones made by a supplier in China that doesn't treat its workers well. If it's a relevant issue for Apple, it's a relevant issue for every bank in the region to ensure that they are not using third-party vendors who don't treat their staff well. These are just examples of things that Islamic banks and all banks are going to have to do.
Yeah. Thank you for that, Akber. And Mohsin, obviously, I can see you've got lots of footballs at the back, so it'd be remiss of me not to ask a question around the World Cup next year in 2022. Do you think 2022 will also help accelerate the pace of change when it comes to ESG?
I think it has already. I mean, the journey started a decade back, right, when Qatar won the bid. And I remember, I think there was all sorts of questions around labor rights and issues with the welfare of the workers and everything. And so Qatar has come a long way. And I think next year will be the focus and spotlight on all such issues coming to the fore again. So yes, next year is going to be the tipping point also for Qatar to ensure that the listed companies, for that matter, that they have sustainability reports which are talking about ESG issues primarily. I think the focus on Qatar has more been on S, given the large population of laborers. But the environmental element is also becoming more and more important. Traditionally, it's carbon emissions or carbon greenhouse gases that have been the topic. But I think what the region and Qatar needs to look at is also the water scarcity and water as a resource as a risk, environmental risk for the businesses. Because I think that is more pertinent or more slightly bigger risk than the climate risk, than the carbon risk for this region. So yes, I think we will see more work going in. As I mentioned, we will make it mandatory next year in terms of ESG reporting. And hopefully we will also see sustainability fund or an ESG fund being launched also in Qatar next year.
Excellent, great. So on that note, I think we're closing to the end of our session today. It's been incredibly insightful, and I think I certainly have learned a lot and have a number of takeaways. So before I do, maybe pass on to the panelists again for their final closing remarks. And I think we've got a number of questions here actually for each one of you, which we'll collate and we'll share, and we'll try to respond to people on after this session as well. I think certainly from my perspective, there does seem to be a clear acceptance around the merits of ESG. I think the journey has certainly already begun in Qatar, in the region, for banks and non-banks, and a lot of good progress has been made. But I think there's also clear recognition and acceptance that there's a lot still to be done. But I think certainly from my perspective, one of the most important points is really around responsibility and whose responsibility this is. And I certainly believe that it's not something that's just for the banks. It's the responsibility for everyone. It's the banks, it's the regulators, it's the auditors, the advisors. It's everyone that needs to be responsible, not just at an institutional level, even at an individual level. It's not just, I think someone once asked me, should we have an ESG officer, or who should be the ESG lead? And my response really was that everyone in that organization, to Akber's point, to what Mohsin has discussed and what Kay's mentioned, is responsible for ESG. And it really reflects on our day-to-day professional lives in everything that we do. It's not just about a report, it's not just about an individual, it's really inbuilt in the DNA of everything that we do. But maybe at that point I can just hand over to Kay, starting off with Kay, just for some final closing remarks, then Mohsin, and then Akber.
So my only sort of comment would be that ESG is mainstream already, and we need to make sure that it's embedded in absolutely everything that the financial services sector does. And in particular, I mean, historically it was mentioned, there were socially responsible funds versus everybody else. Now I think it's going to be that everybody has to actually have that lens applied to what they do. And every bank lending decision will ultimately have to have embedded within it an ESG assessment. And that can only be good, not just for the planet, but also for society as a whole. And I think it also then starts to level up globally, that, you know, people eventually start to see that there is merit in best practice rather than actually tumbling to the bottom. So I'm hopeful the banking sector globally is going to play its role and really will help deliver this and help corporates on their journey to that net zero and to a more responsible future.
Great, thank you. Mohsin.
Yeah, I think for me, it is, I mean, it is a capital-driven agenda. It's all good that we want to be good to the society and everything, but at the end of the day, we are sitting in capital markets, banks are there, so it will be a capital-driven agenda globally and in Qatar also. So banks who are obviously a major chunk of the market cap in the country, if they don't provide ESG disclosure to their customers, to their investors, and do not incorporate ESG practices into their operations, they will start to lose on investment capital from the investors. And I think that will drive, at the end of the day, the need for behavioral change, or that will drive the behavioral change of because we are an economic animal. I mean, we are less of a social animal, given all the way the world has evolved, but we are definitely an economic animal, and we will respond to the capital demand. And I think the banks, the sooner they embark on this journey, the better it is, because as Qatar, we do recognize that we will not be the largest market in the region, but we want to be the investment destination of choice for ESG sensitive investors globally.
Thank you. Akber.
Just to underline the point Mohsin was making, really, I just wanted to highlight that from a bank's perspective, from a bank's management perspective, from the perspective of an investor in banks, the cost of funding, the cost of capital for companies which have more advanced ESG strategies and score more highly on ESG indicators is lower. In the bond market, there's something called the greenium, which is the premium that green bonds or green sukuk have on them. So it's actually got a name for it. It isn't, which means that as an issuer, you will be able to issue more cheaply if it's a green bond or green sukuk. Similarly, as Mohsin was mentioning, there are tens of billions of dollars of passive inflows coming into ESG ETFs and ESG funds, which companies which are listed, which have listed equity, will benefit from those capital flows. So there is that critical element. The other element which is important from the profitability of a bank's perspective is that customers, and probably more so retail banking customers rather than corporate or government customers, will over time start making choices about whether they want to be associated with banks, depending on how green their credentials are and whether they actually are doing the right things. Individuals, and this is across products, not just banking, will be making choices about where they want to allocate their money and who they want to, whose product and services they want. And one of those criteria will certainly be ESG. And the younger your customers are, the more important this will be for them. So it may not be an issue for immediately, but it does give bank managements time that in 10, 15 years from now, the customers who are running their clients, those people, for them, ESG will be something that they've grown up with. So there are very important investment considerations as to why this shouldn't be forgotten.
Great, thank you very much for that, Akber. I guess all that's needed for me to say is really to thank everyone for joining. There's a number of questions in the chat box for UK, for Mohsin, for Akber, and I think we probably will need to have another session on this, because we have questions around the regulatory agenda, Islamic banking, practices in the Nordics, Kay, and how we can learn, given Norway is the largest, one of the largest oil producers in the world. So the number of questions here that I think we'll have another session for. So what I'd like to do at this stage is really just thank you, Kay, Mohsin, Akber, thank all our participants today. And really just say to everyone to keep safe, take care, keep well, and hopefully look forward to speaking and seeing you all again soon. Thank you very much indeed.
Thank you.
Thank you. Thank you.